Vanguard is lowering investing costs from dozens of its mutual funds and ETFs. The firm says the reductions could save investors more than $350 million this year alone. To help explain and put it into some context here, we've got Yahoo Finance senior columnist Kerry Hannon. Kerry, what do we know about this?
Hey, Brad. Yeah, now this is the largest reduction in their fees in its entire history for Vanguard, so that's about 50 years. This is a big deal. It's 168 funds and ETFs where they've slashed their expense ratios, which is in essence the operating costs. So it's everything from management fees to accounting fees, legal fees, all kinds of things that go under the covers of what it costs to run these funds. That's what you think of as your expense ratio. And in fact, they slashed that 20%, which is really great for investors. And in fact, we may see more of their competitors doing a similar thing. So today, their average expense ratio at Vanguard is something like 0.07% compared to an industry average, which is around 0.44%. So this is really good news. Now, I've got to say, Vanguard is very low expense anyway. So they've already have very low expense ratios. So while it's significant when you say 20% cut, they're still pretty low to begin with. So it's the more important thing is the message it sends to people is that we care about your costs. Now, I'd be remiss not to mention that Vanguard in the last couple of weeks ago did have a settlement with the SEC for what is called for one of its target retirement funds. The settlement was around $106 million, and it was for quote, misleading statements related to capital gains distribution. So, there's always good and bad news along these things. So maybe it's back, a way of some good PR for them. But whatever it is, it's great news for investors.
So what do lower expense ratios mean for investors then? And how should they be thinking about this change in their portfolios?
Exactly. It all comes down to fees, Brad, because the fees are taken out of your investment return. So over time, even something that seems like minuscule, like I just said, 0.07%, right? Now that seems like a tiny little fraction of money. But when you look at it over time, it has an outsized impact on what your actual investment is going to return to you. So it's very important that people pay attention to fees because it's something none of us really think about. And you can go to the page of the mutual fund, you see, it says right there what the expense ratio is. Anything under 0.10% is considered low. Go for the lowest fees you can get. If you have the opportunity to find a low-cost fund, the lower, the better, because you'll be grateful down the road when you find out that there's less being taken from your account. If you want to know specifically what those quote operating expenses are, go to the fund's prospectus, which you can find a link to it on the fund page as well, and dig through all that stuff, and they'll explain what they're spending on. But the key is that fees matter. They matter big time, and a lot of people just think, oh, it's such a small amount. What do I care? You should care.
Kerry, thanks so much for breaking this down for us. A huge move, it sounds like, being made over there. Appreciate it.